Let's get on board Mr. Rohit Gupta, the Managing Director, who is joining in right now. And let's start with the key point, Mr. Gupta. A preferential issue to top HNIs at 390 rupees. What will this do to the shareholding post the issuance, and how much will HNIs hold in the expanded equity base?
The post this dilution, the HNIs, the fresh issue will be roughly around 21% of the post issue, and will be raising 54 crores, and the post issue our equity capital will be 6 crores and from 4.68 crores right now.
Okay.
Yeah. So we are diluting 21% for 54 crore equity.
And how much would HNIs be holding in this expanded equity base, sir?
So HNIs will be holding 21%.
Okay, understood. What's the rationale behind this preferential issue? If you could just explain to our viewers, how will the funds from this issuance be used?
So there are now, for a small company, there are two ways. Either we were sufficiently, our net worth right now before this issue was 120 crores, and there was a lot of scope to leverage ourselves, but we thought that this, a set of good HNI investors coming into it, increasing our net worth, in helping us increasing our visibility, helping us on the credit rating side, we thought we bring these good quality HNI investors into it. Now with a strong base, there's a lot of scope with our company to leverage ourselves and to grow our AUM for next 2 to 3 years. Post this dilution, we don't think we will be doing any further dilution for next 2 to 3 years, and we will be just focusing on our business, expanding our business, and that was the thought for doing this.
Have any, you've spoken about growing your AUMs for the next 2 to 3 years. Do you have any growth targets that you may have set? And also this preferential issue, what kind of an impact will it have on your return ratios?
Yeah, return ratios right now, we were not leveraged. Our gross IRRs were 18 to 20%. Between both the segments. In the mid-size corporate, we were working within 18 to 19%, and which is at par with the industry average into the segment we are in, a little 100 to 200 basis point little higher than, but there's a lot of USP which our product have, and in the SME segment we are doing blended yield of around 20%. So this will help us to leverage ourselves. Right now we are only 0.4% debt to our net worth, so it leaves huge scope to leverage ourselves. Definitely we closed our book roughly around 135 crores AUM, and right now we are working with 185 crores. This year we have already had a healthy growth, and with this equity coming and with lot of scope on the debt side, yeah, definitely we are going to see very higher growth during next 2 to 3 years, anything between, you can say, between 15 to 70% CAGR growth on the AUM side, definitely.
I'm sorry, I didn't catch that clearly, and I think that investors would be fairly curious to understand the long-term growth plan, say for the next 5 years, potential for growth on profits as well as your revenues for the next 5 years, the run rate.
Well, it will be difficult for us. Can only speak in terms of CAGR growth. Definitely we are seeing that next 3 to 4 years, we should be doing 50 plus CAGR growth on the AUM side. As we'll be expanding, we are expanding our SME business. We have already opened 4 branches during the March quarter, and coming ahead, we have expansion plans, expanding ourselves into North India. So it will be difficult for me and at this stage to give guidance on the profitability side, but on the AUM side, we are quite certain that we'll be able to do this kind of figure during next 3 to 4 years. Yeah, definitely we have built a very good, high quality book with us, and we are very focused to build our company to have on a profitable growth, and that is our motto, and we want to build our company only through it will be a profitable growth, and we are very focused on building very strong processes, and we still are not carrying any debt. We did some pilots with 2 fintech companies also, and we have got huge learnings from those pilots which we have done, and we want to incorporate those things into our SME business and little bit on the corporate side also.
Okay, let's talk about FY17 then, the year gone by. What was your asset quality like, and how do you see it shape up going forward? If you have any gross NPA level targets for the end of FY18?
No, we had a AUM of 134 crores at the end of the March, and we were running without any NPAs as on that date, and we just started SME in the last quarter of the last financial year, and we didn't have NPAs as on date, as on 31st March, and we are hopeful that we will be doing better than the industry average, and we are focused to build a very high quality book debt and to build our processes, and we lot of good people and senior high experienced people have joined us, and we have tried to take good people through a ESOP model so that they have a little longer skin and have ownership feeling in the company. So good people have joined us, and we have given ESOPs to those people, and we are building this company with a very good team of experienced people with us.
Mr. Gupta, that's actually very interesting. Zero NPAs. I think that would be quite commendable, really, given the current environment. I just want to lastly ask you on your net interest margins, what kind of NIMs are you enjoying currently, and how have your cost of funds shaped up, and is there any case for margin expansion going forward?
Yeah, definitely. Till last year, so we were not leveraged. So to talk about the spreads a little difficult. But if you see, we raised funds through State Bank at a sub 10% limit, and considering the size of the company, I would say it will be very good to start with that kind of cost of borrowing. We are very focused, and that was the reason also to raise this preferential issue, so that we want to start with a good healthy net worth, and that will help us to reduce our cost of borrowing, and we are very focused, and with the cost of borrowing in control, we definitely see that we will be working within at least 4 to 5% spreads on the broader side.
Okay, Mr. Gupta, thanks so much then. Really appreciate you giving us your time on ET Now to explain to us what the growth potential is, the profitability outlook is for CSL Finance. Thank you so much for speaking with us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.